Okay, welcome back, guys. Welcome back to accounting. Today we're going to do another accounting paper one paper. We're going to be focusing on financial statements, specifically the income statement. And then this paper, guys, is from the Gauteng trial exam, paper one, the Gauteng trial, which they wrote now. So we're going to do this question. We're going to do both this question. The first one will be the statement of comprehensive income, which is the income statement. Then after we're done with the income statement, we're going to focus on the balance sheet, only the equity and liabilities section of the balance sheet. So that's what we're going to be focusing on today. So without any waste of time, let's go on to the paper, guys. So let's start on this kind of theory questions first and try to do them before we move on. So the first one is concepts. You have to choose here between income statement, current assets, non-current assets, balance sheet, expense, net working capital. So we're supposed to choose the correct answer here. So let's go through. Number one, what are they saying here? They are saying the statement reflecting the financial position of the company is called an financial position, guys. When we're talking about financial position of a company, which statement is that? Yes, you know it. The financial position, we're talking about the balance sheet. Balance sheet, it shows us the financial position of the company, also called the statement of financial position. So let's go to number two. Number two, they're saying consumable stores on hand. Consumable stores on hand, you can treat it as trading stock on hand. So almost the same as trading stock on hand, but this is just consumable stores, things that we are using now and then in our business. So consumable stores on hand, what are they? Exactly. Consumable stores, they are current asset. Much like trading stock. Trading stock is a current asset. Also, consumable stores on hand is a current asset. These are free marks, guys. Make sure you get them. They will be there on your final paper. So let's go to 1.1.3. A fixed deposit that will mature in 2 years. A fixed deposit that will mature in 2 years. What do we call a fixed deposit that will mature in 2 years? Remember, the fixed deposit that matures within 12 months is called what? Is called the fixed deposit that is going under the current assets, under cash and cash equivalent. That one matures under 12 months or before 12 months. On the balance sheet, we're recording it on cash and cash equivalent. Then there is this fixed deposit that matures after 12 months. This one, we call it the fixed deposit that goes into our non-current assets below land and building, the high and equipment. So this is a non-current asset because it's going to take more period of time for it to mature to be cash. So now let's move to 1.4. They are saying the difference between current assets and current liabilities. The difference between current assets and current liabilities. So the difference between current assets and current liabilities, what do we call it? Very simple answer. Remember, current assets are the positions that we use in the business to generate profits or economic profit. Then current liabilities, these are obligations that we have to pay. So the difference between these two, they're giving us what we call the equity of the business. So let's see which one is equity here. It's right here, capital, net working capital. So the difference between assets and liability, it's your capital, the capital that you are using in order for your business to generate profit. That's the difference between assets and current liabilities. Current assets and current liabilities is net working capital. So let's move on now to this one here. On this one, they are saying the statement reflecting the financial results of a company. Now it's saying the financial results of the company, whereas this one, it was saying the statement reflecting the financial position. Now it's a bit different. Financial results and financial position. So the one that reflects the financial results, it's dwelling mostly on whether the business has made a profit or a loss for the year. And that is the income statement. It reflects the financial results. The balance sheet reflects the financial position. Income statement reflects the financial results, whether the business has made a profit or a loss. Income statement. So yeah, I think I'm done with this one. Let's go straight to the real thing. 1.2.1, but refer to information from the records of Faint Limited PPE for the financial year that ended on 28 February 2022. It's important to note the financial year, guys. They are saying it ended on 28 February 2022, which means it began when? It began on 1 March 2021. So it's important to note your financial year. Okay, so what are they saying here? Complete the following for the year. 1.2.1, complete the statement of comprehensive income, aka the income statement, which is the statement of financial results. Note that some information is included in the answer book. So this is for 32 marks. Very important. For 32 marks. Yeah, something that you have to work on. This 32 marks, at least come up with something here. Okay, so okay, let me get my paper where it continues. Okay, I will get rid of this one. This is where our adjustments are continuing. So we're given the trial balance here. You can see the balances, all these balances. The trial balance is on 28 February. Then there are some adjustments. Which means these balances are somehow not correct. So these balances are somehow not correct. We are supposed to adjust them using all these adjustments. Very easy adjustments, very easy. So they repeat themselves on each and every paper. So I believe by now you know these adjustments by heart. Even if you can go back to the previous income statement that we did, make sure you go back to the previous income statement that we did on this channel. That income statement is very important. It might help you. It might help you on your final exam. Go back to that income statement on this channel and revise it, please. It's going to assist you, especially where they are saying calculate the trading stock using the weighted average method. That thing is a bit not familiar in income statement, but it might come on your final exam, where you must not be surprised, because I just told you now. It might come where they say prepare the income statement, then adjustment number 1, you find they are saying calculate the value of closing stock using the weighted average method. Then you start getting confused. Why are we doing this on paper 1? Because it's paper 2. So sometimes you might need to use the weighted average to calculate your your trading stock on the income statement. So yeah, so let's continue on this one. So this will be the answer book for the income statement. Here I've already passed it. I was supposed to write the answers here, but I believe you guys noted them. You can go back to the video and identify where the answers are supposed to be. This is where I cited. This is the first thing that we did, so I forgot to put it on the answer sheet, so you can just go back to the video. Now we're going straight to the income statement. Okay, sales. Are we given any sales here? Only to find out that we don't have any sales here. On our answer book, we don't have any sales, so we have to say open brackets, close brackets, which means there is something we have to do here for us to get the sales. So let's check our information. What are they saying about sales? Are we given any sales here on our trial balance? Are we given any sales? Oh no. Let's check sales. There is nothing. So there is nothing on sales. What do we do when it's like this? Simple. We go to the adjustment. We look at the adjustment. They are supposed to tell us something about sales. So the first adjustment I'm coming through is adjustment number A. They are saying Faint PPE Limited operates on a 60% markup policy on all sales, which means they are using a 60% markup. So if you've been following the videos, you know how we use the markup to turn sales into cost of sales. So it's coming to that even now. We're going to use this markup to turn sales into cost of sales. So they are saying they are using 60% markup. Then they are saying last year's sales amounted to 6,500,000. Last year's sales amounted to 6,500,000. Okay, we continue. This is last year. We don't care about last year. We want sales for this year, which is February 2022. So we don't want sales for last year. We continue. They're saying Faint PPE Limited is pleased to announce a 20% increase. 20% increase in sales for the year ending on February 2022. There were no sales returns for the year. So they are pleased to announce to us that their sales will increase by 20%, which means if last year's sales were 1, this year they will increase by 20%. You understand that? If last year's sales were 10%, this year they will increase by 20%, which means they will go up into 30%. So have they given us last year's sales here? Yes, they've given us last year's sales. They say the sales for last year amounted to 6,500,000. So we're going to use the last year's sales and increase them by 20% in order to get the sales for February 2022, which is the current year. Okay, very simple. So let's do it. We'll do it. The sales. Last year's sales, they given us 6,500,000. So we're going to use that one, 6,500,000. This is last year's sales, but we're increasing it by 20%. So let's increase it, multiply by 120 over 100. That's how you increase. If you want to say 6,500,000 times 20 over 100, then you get your answer, then you add it. It's going to waste your time. When they say increase, just take 100 plus 20, because they are saying you're increasing by 20%. So when you say 100 plus 20, it's going to give you 120%. So our sales are 120 over 100. They have improved from being 100% into being 120% this year. So then we punch our calculator. So it's how much? It's 6,500,000 times 120 over 100. So our sales for this year, as per our calculator, you can see here, it's 7,800,000. So let's write it down, 7,800,000. So well done, you just found your sales. Very simple adjustment. You just found your sales. Okay, it's how much? 7,800,000. So we got into our answer book and we put the sales, 7,800,000. Sales is 7,800,000. This marking pen is so big, I cannot mark well, I cannot write well here, but you can see the sales is 7,800,000. Then here you write how you found that amount. You have to write it on your brackets, how you found this amount. How you found this amount. Okay, this is how we found it. They given us sales for last year, which is how much? 6,500,000. So we took the sales for last year, 6,500,000, 100,000. Then they say we must increase it by 20%. Then when we increase, we say times 120 divide by 100. That's how you increase. Even in budgeting, when they say rent income will increase by 20% or by 5%, you just take 5% plus 100. Then you're going to say times 105 over 100. If it's increased by 30%, you say 30 plus 100. Then you're going to say 130 over 100. Even in budgeting, this is more common in budgeting. When they say insurance will increase by 10% in the next year, these are free marks. Just increase it. So this is how we got our sales here. Okay, so let's move. Now let's go to cost of sales. Cost of sales is very simple, guys. If you are given your sales, here, it's very simple to convert your sales into cost of sales. It's very simple to convert your sales into cost of sales. Why? Because they've already given us the markup here. They said they are maintaining a markup of 60% on cost. So the markup is 60% on cost. We're going to use this markup in order to turn the sales that we got into cost of sales. This one is very important. It will be there whether you like it or not. You are supposed to convert your sales into cost of sales. You are supposed to know that. So let's convert. So this is the sales that we got here. Let's convert them. Convert into cost of sales. Convert to cost of sales. Oh, my marking pen is not doing fine. It's big. Oh, I'm not used to big handwriting. But let's hope you guys are finding it clearer. As long as you guys are finding it clearer, it's all fine. So let's convert these sales that we got into cost of sales. This is the formula that we use. I've been talking about it. I'm repeating it again and again. You will also write it on the 16th when you write your final exam. So we're going to say what we have. What we have. Divide by its percentage. Multiply by what you want. That's it. What you have, divide by the percent. What you have, divide by the percent of what you have, if you get me. So in this case, what we have is what is the sales, which means we are supposed to divide by the percentage of sales, because we are trying to convert sales into cost of sales. So we are going to divide by the percentage of sales. Then we multiply by the percentage of what we want. What is it that we want? We want cost of sales. So before you write your percentages, first of all, you write your small box here. Write your small box. Sales cost is always 100. Cost is always 100%. This is your percentage box. So cost is always 100%. After cost, you have your markup. Your markup, they told us it's how much? Let's check so that we are all in the same page. They told us the markup is 60%. So if you can see here, the markup is 60%. So markup we're always given. Our markup is 60%. Then sales, how much will be your sales? The percentage of your sales? Your sales will be cost plus markup, always, which means your sales will be 160. Right? So now you have your percentages. Once you have your percentages, it's time for you now to use your formula. What you have is what? Is sales of 7,800,000. So we're going to take 7,800,000 is what we have. The formula says divide by its percentage. We're going to divide by the percentage of what we have. What is it that we have? It's sales. Then we consult our box. The box is saying how many percent is sales. We find out sales is 160%. So the percentage of what we have, which is sales, is how many percent? 160. We're going to divide by 160. That's the percentage for our sales here, our sales here, our sales here. It's 160. Then multiply by the percentage of what you want. What is it that you want? Obviously, you are trying to convert into cost of sales. So what you want is cost of sales. Then you consult your box. Multiply by the percentage of what you want. What is the percentage of your cost of sales? The percentage of our cost of sales is 100. So we're going to multiply by 100. I hope you get it, guys. You can revise the video and go back to it if you did not get it. So let's punch our calculator to get our cost of sales here. So we're going to say we have 7,800,000 divided by its percentage, which is percentage of sales is 160 as per our box, times what we want. What is it that we want? We want cost. And then the percentage for cost they are saying is how much? Is 100. So we're going to multiply by 100. Then our answer will be, as you can see, it is 48758. Oh, it's 4,875,000. So 8 million. Sorry, it's how much? It's 4,875,000. That's your cost of sales. That's your cost of sales. That's how you convert sales into cost of sales. Always. Even in budgeting, there is this chapter whereby you are supposed to get purchases, credit purchases, where they say you are supposed to get payment to creditors. So if you are supposed to get payment to creditors, maybe for July, you have to go, and if they are saying you are paying them 1 month after the purchase, which means if we want the payment for July, you have to go back to the purchases of June. So they do not give you purchases in budgeting. They give you what? They give you cost of sales. So the other name for cost of sales is purchases. So you use that cost of sales. So if they did not give you that cost of sales, you have to go into sales, convert that sales into cost of sales. And this is the way that we use to convert that sales into cost of sales. So once now you have your cost of sales in budgeting, you know it's equals to your purchases. Cost of sales and purchases is one and the same thing. Once you've found your cost of sales, it's more like you've also found your purchases. So if you found your purchases, what does that mean? It means now it's just time for you to convert those total purchases into credit purchases. Then that's your payment to creditors. So this thing also works in budgeting. Knowing how to convert sales into cost of sales. Go and revise this part because it's very important. Okay, I've moved now. We're moving. We found out that our cost is how much? Is 4,875,000. So we're going to put it in our formula. 4,875,000. We're going to put it in our answer book. 4,875,000. So our cost of sales is 4,875,000. Remember, cost of sales is always in brackets. Don't forget to show it here how you got it. Yeah, this marking pen is not for me, but I'm trying. So let's show how we got this cost of sales. We took our sales, which is 7,800,000, and we converted it. We said sales 7,800,000. 7,800,000. Then we divided by its percentage. We found out on the box there, you can go and check it. On the box, we found out the percentage for sales is 160. Then times the percent of what we want, which is the cost, which is 100. Cost is always 100. When you want cost of sales, you always multiply by 100. So that will be your cost of sales. So now we want our gross profit. Gross profit, we're going to say sales minus cost of sales. Remember, guys, if you don't show brackets, you are wrong. So make sure you show brackets on your cost of sales. And then you punch your calculator. You don't add. You're saying sales minus cost of sales is equals to gross profit. Once you make a mistake, you'll be wrong. Even if you know your sales is wrong, even if you know your cost of sales is wrong, just follow the procedure, you will get part marks. If you don't listen to that, you will fail. If you don't know the answer, just take any amount that you think is sales. Even if it's just in the trial balance, it's written sales. You are not sure what to do, you are confused. Take that sales, put it here. Then look, try to convert that sales using the markup and convert it into cost of sales. If you are given cost of sales, just put it here if you don't know what to do. When you put it here, you put it in brackets. Then you say sales minus cost of sales. You will get your gross profit and you will get part marks. It shows that you understand the procedure and the rules. It's not about being 100% right. Understand? So that's it. So I hope you understood that. Go and repeat and hear me what I was saying, because it's very important. So now let's punch sales minus cost of sales. The sales is 7,800,000 minus cost of sales, which is 4,870,000. Is 4,800,000 and what? Is 4,875,000. 4,875,000. So as you can see, our gross profit is 2,925,000. 2,925,000. We minus sales from cost of sales, and then we got 2,925,000. So let's write it down. 2,925,000. That's our gross profit. Even if your amounts are wrong, just follow the process. Don't leave gaps. Don't leave gaps. Even if you have your maybe water and electricity here in your trial balance, you just write water and electricity. If you don't understand the adjustment, take this on water and electricity and put it here as it is. You'll get maybe some part marks. I don't know, maybe. Just take it from here. If you don't understand, if you are totally confused, that's a contingency plan for in case you are totally confused. But if you know what to do, do the right thing. We are expecting 100%. Do the right thing if you know what to do. But if you don't, just take it from your trial balance if you are confused and put it here. Then so that when you add here, you add all your expenses. Then they give you a total operating expenses. Don't leave gaps. Don't leave gaps. You will get part marks. Because if you can check, this thing is 32 marks. So if you don't leave gaps, you might come up with maybe about 15 marks out of, if you don't know anything, you can come up with about 15 marks. But if you leave gaps, you're also applying to fail yourself. We've told you the tricks, but if you leave gaps, you're also applying to fail. Okay, let's move. Let's move to other operating incomes. Other operating incomes. La, it's most usually rent income and trading stock trading stock surplus and provision for bad debts adjustment. So firstly, the first suspect, the usual suspect is rent income here. So let's deal with our rent income. Rent income. Show in brackets. Rent income is always easy. Once they give you a percentage, you use your favorite formula. Rent is easy. So let's do it. Let's check what we have here on rent. What is it that we are supposed to do? And where do we really have rent income? Let's check. Do we have rent income? Yes, we do have rent income. How much is it? It's 130,200. So we have rent income of 130,200. So you go to your, maybe where you are writing your answers or where you are doing your calculations. You say rent income is how much? It's 130,200. You write 130,200. This is not your final answer. There is an adjustment. So let's go to the adjustment for rent income. It's number E. If you can see, adjustment number E. Just check what's happening with number E. They're saying a vacant storeroom. A vacant meaning it was an empty storeroom, then it was rented to a tenant, meaning we're allowing a tenant to rent in our storeroom on 1 March 2021, which is the beginning of the year. So we rented out our storeroom. Then they're saying on 1 December 2021, which is during the year. Remember, our year ends on 28 February 2022. So they are saying on 1 December 2021, the rent was decreased. This one is a free mark. The rent was decreased by 7.5%. Provide for outstanding rent for February 2022. What does that mean? Remember, February 2022 is the last month of our financial year. Our financial year ends on February 2022. So which means we received rent for 11 months here. If they're saying it's outstanding, they're saying provide for outstanding rent for February 2022, which means we received rent from 1 March 2021 up until January 2022, because February, the last month, we did not receive. How do we know we did not receive? They are saying provide for rent for February. So which means we did not receive. Sometimes they will say rent was paid up until March 2023. March 2022. You know, if it's March 2022, it's the other financial year. Our year ends on February, but the rent was received up until March. Which means what? Which means we received rent for 13 months. So you are supposed to minus that 1 month. But here, we have received rent for 11 months, which means we have to add back the rent for 1 month, which is outstanding. So yeah, that's it. So one thing I will repeat again. Well, I once did a video on what to do when rent was decreased or increased by a percentage on TikTok. Yeah, I think I did it. I will also upload it on the channel so that you can catch up. So let's okay, I wanted to say when rent is decreased or increased by a percentage, is very simple. This is what you do. You draw your timeline. So our year is beginning on March 2021, which means it's ending on February 2022. Okay, so this is March, April, May, June, July, August. March, April, May, June, July, August, September, October, November, December, January, February. Yeah, even though my sticks are leaving more gap, but you find it. This is 12 months actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is March to February. And remember, they are saying rent for February, we must provide for it. They are saying we must provide for it. It is outstanding. So which means this 1 month we did not receive it. Which means we only receive rent from here up until here. So since they said rent was decreased by a certain percentage, let's go and check how many percent was that. They said the rent was decreased by 7.5% on 1 December. On 1 December, the rent was decreased by 7.5%. Let me just fold the paper so that we get more of our focus on rent. So they are saying it was decreased by 1%. The rent was decreased by 1%. Sorry, by 7.5%, not 1%. So when you are given a percentage like this, start from the financial year and give it the percentages and assign the percentages. When you are given a percentage increase or a decrease in rent, start from the beginning of the financial year and assign the decreases or the increases or the percentages. So let's start from 1 March. 1 March, the rent was 100%. 100, March, April, 100, May, 100, March, April, May, 100, June, 100, July, 100, August, 100, September, 100, October, 100, November, 100, December. Remember, note on your adjustment, they said on 1 December. On 1 December, what happened? Rent was decreased by 7.5%, which means from December, we are decreasing it by 7.5. So we are going to say 100 minus 7.5, which means on December, our rent was 92.5. If it was increased, if they said on 1 December the rent was increased, we're going to say 100 plus 7.5. Then it was going to be 107.5. But now it's decreased, so we're saying 100 minus 7.5. So our rent is 92.5. Write it down. Our rent is 92.5 on December. On January, our rent is 92.5. On February, even though they are saying we must provide for outstanding rent for February, but still we know its percentage was 92.5. It's also affected by the decrease, even though we did not receive it. So now, this is the rent that we want, the one that they say we must provide for. This is the rent that we want for February. Once you are given percentages like this, once you have assigned percentages like this, then you add them all together. It's 100. 100 times 100, 100, 100, 100, 100, 100, 100, 100, 100. So it's 100 times 1, 2, 3, 4, 5, 6, 7, 8, 9. 100 times 9, which is equals to 900%. Then the other months is 92.5 and 92.5. This one we will not calculate it because it's not part of this rent. It's not part of this amount because we have not yet received it. So we cannot include it on our calculation of percentages this month. So not unless if they said we received rent for 13 months, we're going to include this month plus the 13th month on our percentages. But now we did not receive this one. Do you get that? That's very important. So we did not receive this one, so which means it's going to be 92.5 plus 92.5. So it's 92.5 plus, or 92.5 times 2. 92.5 times 2, which means it's for December and January. February we did not receive. So 92.5 times 2, which will give us 185%. So now, which means this rent is made up of both these percentages, the 900 plus the 185. So it's made up by 900% plus 185%, which gives us an amount of 1085. So this is the percentage for the whole rent up from March up until this month that we received. So rent is very simple, guys. So now let's punch it to see what we do now. So now what we do, we use our favorite formula. What you have divide by its percentage, multiply by what you want. So what you have in this case is the rent in our trial balance, which is 130,200. So we have rent, which is 130,200, and the rent is for the whole year, but it's covering from the beginning up until this month. This month is not covered because they are saying we must provide for that month. So This rent is for the whole year. It's how many percent? It's made of 100 times 9, which means from here to here, which is 992.5 plus 92.5, which is 185. So in total, this whole rent is made up of 1085%. The formula says what you have divided by its percentage. So the percentage for this whole rent is 1085. Then multiply by what you want. You want to provide the rent for 1 month, which is February. And February is how many percent? February is 92.5%. So we multiply by what we want, which is 92.5% for February. You don't patch percent, you just say 92.5. Then you will get your answer for rent. So let's punch our calculator. It's 130,200 divided by 1085%, which is this one. Then multiply by 92.5. 92.5. So our rent, as you can see, is 11,100 here. 11,100. So it's 11,100. That's the 92.5% that we wanted. That's it. So which means the rent for February is how much? Is 11,100. So we're going to add it there on our answer book. 11,100. That's rent. So we add it on our answer book. We are saying we add the rent plus 11,100. We add it from where? We add it from the rent that is in our trial balance, which is how much? 130,200. So you're going to say 130,200 plus 11,100. 11,100 plus 130,200. So we're going to get 141,300. So that's the total for rent. 141,300. That's it. And guys, if ever you find out what you don't understand, but it's a contingency plan in case, I'm repeating it again, in case you say, yakshaya, you don't get it. Just take this rent, don't leave space. Just take this rent from your trial balance, this one 30,200. Just take it and put it here. It's better than leaving a space. You might get some mark for that. It's better than leaving a space. I hope you've heard me. Okay, let's continue. I was just getting some water. Getting hot here. It's hotter. So let's continue. Check the next other operating income. So we have rent income, we have trading stock. I think trading stock in this case is a surplus. I mean, it's a deficit, but let's be sure. Trading stock is number B. They are saying, according to the physical stock taking, trading stock on hand amounted to 358,240. So it's 358,240. How do you know whether it's a surplus or a deficit? You compare the trading stock that is in your trial balance versus the trading stock that is in your adjustment. So in our adjustment, it's this one, 358,250. And in our trial balance, it's how much? Trading stock, it's how much? Is 370. It's 370, 870. So which one is bigger? Here is 370, 870, which means it's bigger on our trial balance. On our trial balance, the trading stock is 370,870. Whereas on our adjustment, the trading stock is smaller, is 358,000. Understand that. So if it's smaller on the adjustment, listen carefully and you can write notes if you like. If the trading stock is smaller on the adjustment, it means it's a deficit. If it's a deficit, it goes to your expenses. But if trading stock is bigger on your adjustment and smaller on your trial balance, it means it's a surplus. So if it's a surplus trading stock, you will put it here and write trading stock surplus under other incomes. It's just a thing that we've been teaching for the whole year. I hope you understand it now. So in this case, we said trading stock on our adjustment is smaller. So it becomes a trading stock deficit. Trading stock deficit, which means we have fewer or less stock now. So if it's trading stock deficit, we record it under operating expenses, here. So let's see how much is the deficit. So we say trading stock on our, we say trading stock on our trial balance. This is our trading stock and it's 370,870. So you write down on your trial balance is 370,870 minus the trading stock on your adjustment. How much is the trading stock on your adjustment? On your adjustment, the trading stock is 358,240 right here. 358,240. So you minus that one. 358,240. That's it. That's the trading stock on your trial balance versus the trading stock on your adjustment. You can see it's smaller on the adjustment, it's bigger on your trial balance, which means it's a trading stock deficit. It goes to your operating expenses. So let's find out how much our deficit is. So our deficit is how much? 370,870 minus 358,240. So our deficit, as you can see, is 12,630. So it's 12,630. That's it. Then the next thing, we are still not done on operating expenses. There is one space here for operating expenses, which means there is one operating expense that we are supposed to include here. There is one operating expense we are supposed to include. It might be what? Might be provision for bad debts adjustment or commission income. Let's see if we do have those things. Commission income, do we have it? We don't have any commission income here. We don't have it. So provision for bad debts, yes, we do have it. This is the provision for bad debts on your trial balance. So provision for bad debts is much similar to trading stock, just that they ask it in a different way. And here you must listen carefully. Let me try to explain. So they will give you provision for bad debts, which means you were planning on 1 March 2022. You were planning to provide this amount for provision for bad debts. You were planning to provide 2,140. Then now, on your adjustment, what did they say about provision for bad debts? They say you must decrease the provision for bad debts. So if you are decreasing the provision, which means you are saving money. If they say decrease provision for bad debts, it means you are saving money. Remember, when you provide for bad debts, it's like you are saying you are going to provide 2,140 at the beginning of the year. You are going to provide 2,140, which is from your own pocket that you are going to provide. Now they say decrease the provision, which means you are going to provide less money. If you are going to provide less money, it means more ching for you. You are going to save money because you are going to provide less now. You are going to save money. Do you understand? So the money that we are going to save, they already given us here. They say decrease the provision for bad debts by 230. If it's this, you don't minus anything. They've given you, you are going to save 230. You are going to decrease 230. So you come here, you say your provision for bad debts adjustment. For bad debts is 230. So what if they said, let me do a hypothesis, 230 plus, how much is this one? I want to give you an example, sorry, plus 2140. 230 plus 2140. 2370. So now you see, on your trial balance, for an example, on your trial balance, your provision for bad debts is how much? 2140. Then on your adjustment, your provision for bad debts, on your adjustment is 2370. 2370. So how will this come? It will say provision for bad debts must be decreased to, or provision for bad debts must be adjusted to 2370. If it's like this, if they say provision for bad debts must be adjusted to 2370, this is how you do it. You open your bracket, you take trial balance 2140 minus adjustment, which is 2370. So your provision for bad debts, you check which one is bigger now. Adjustment is trial balance is smaller, adjustment is bigger. So if adjustment is bigger, it means your provision for bad debts now is an income or expense. It means it's an expense because you are adjusting, you are going to provide more than what you were planning on your trial balance. So if it's like this, it means it will be an expense. Your provision for bad debt adjustment will go to expenses, and it will be 230. I hope you get it. So once they give you two amounts and say adjusted two, you just minus and look which one is bigger. If the trial balance is bigger, the adjustment is smaller, then it will be an income. The difference between the two amounts, it's 230. You will put it under other incomes. But if the adjustment now is bigger, the trial balance is smaller, it means now it's an expense. You will put it under operating expenses, the 230. So I hope you notice the difference between the difference that I'm trying to make here. So if they say adjust to a certain amount, this is what you do. You minus these two amounts. Then you check, which one is bigger? Is it the trial balance or the adjustment? If it's the adjustment that is bigger, then it goes to operating expenses. If it's the trial balance that is bigger, then it goes to operating or other income. I hope you understand me. But in this case, they did it in a different way. They said, decrease the provision for bad debt by 230. Decrease the provision for bad debts by 230. Once they do this, they've given you an answer. If they say decrease, it means it's an income. But if they say increase, it means it goes to operating expenses. Do you get me? Go back and revise. If they say decrease, it's an income. It goes to operating income or other operating income. If they say increase provision for bad debts, it's an expense. It goes to operating expenses. Go and revise what I just said about provision for bad debts also, and how I was saying about this, because these are the both ways that provision for bad debts might come up as. These are the both ways. So let's pass. We just found out that our provision for bad debts will be saved. We will save 230. So let's get the total. So the total for other operating income now, for other operating income, we are going to say rent income plus provision for bad debts. Then we will get the total here. So the rent income is 141,300. So we punch our calculator, 141,300 plus provision for bad debts is how much? 230. So we're going to add 230. Going to add 230, which means both our rent income and our provision for bad debts, they are giving us a total amount of how much? Of 141 on our calculator. 141,530. That's it. 141,530 here on our calculator. So if you find out, maybe you don't understand this provision for bad debts, just put it here as it is, just like I did as well. It's a mark. There's no reason to leave spaces. Absolutely no reason to leave spaces. If you leave space, you are applying to fail. Don't forget that. Okay, now let's go to operating expenses. Let's go to gross income. Before we continue, let's go to gross income. Gross operating income. How do we get gross operating income? This is what we do. We say the total for gross profit plus the total for other operating income. The total for gross profit, whether it's right or wrong, just do it. The total for gross profit plus the total for other operating income, whether it's right or wrong, just do it. So let's get it. So the total for gross profit is how much? Gross profit is 2,925,000. So we're going to say 2,925,000 plus total for other operating income is how much? 141,530. 141,530. So we're going to get our gross operating income of how much on our calculator? 306,650. 366,530. Okay, so this is our gross operating income, 3,066,530. 3,066,530. You will forgive my handwriting, guys. I'm not used to writing with such a big marker, so you will forgive me for that. So they've given us salaries, they've given us directors' fees, they've given us depreciation. Wow, we are lucky. Sundry expenses, they've not given us. So let's go and check what's up with sundry expenses. What's up with sundry expenses? Anything that talks about sundry expenses, A is not it. B, C, D, E, F is not it. Then let's turn to the other part of our adjustments. Sundry expenses. G is not it. H is not it. J, yeah, on J they are talking about sundry expenses. They are saying sundry expenses is the missing figure in the income statement. That means it's a balancing figure. So we pass it. If it's a balancing figure, we just pass it. We will see it later. It's a balancing figure. We just put a question mark. We will see it later. So trading stock deficit, we just did it. Let's go and check which other expenses are there. So we did this one, number A. We did number B. Number C, this one is for balance sheet. This one is for balance sheet, where they are saying a debtor with a credit balance of 3.4 must be transferred to the creditor's ledger. This one, you edit both on your debtors control and your creditors control, or you add it both in your trade and other receivables and trade and other payables on your balance sheet. That this one will be there on your final exam. So balance sheet, trade and other payables, you add this one. Trade receivables, you add this one. Then number D, what are they saying on number D? They are saying decrease provision for bad debts, we did this one. Number E, rent, we did it. Number F, but a faint PPE, we did not do this one. So let's do it. Number E, they are saying faint PPE Limited paid a 40% deposit. A 40% deposit on their audit fees for the year. What does that mean? It means we did not pay the total of our audit fees. We only paid how much? 40%. So if we paid 40%, how many percent is remaining? Obviously, 100 minus 40, 60 is remaining, which means the audit fees that we paid on our adjustment is only equals to 40%. And then we are left with audit fees of how much? Of 60%. Audit fees is always like this. Audit fees is a free mark. I'm not expecting anyone to get audit fees wrong. Please, I'm begging you. Sometimes they will say 60% of the audit fees is outstanding, which means we have paid only how much? 40%. Then outstanding is how much? 60%. Sometimes they will say 35% of the audit fees is outstanding, which means we've paid how much? 100 minus 35. We've paid how much? Is it 75? If they say 35% of the audit fees is outstanding, which means we've paid 75, then we are left with how much? 35. So what do you do in that case? You take the audit fees of that of that trial balance. You take that audit fees in your trial balance, divide by its percentage, multiplied by the outstanding percentage, which is what you want. Do you get me? You take the audit fees in your trial balance, divide by its percentage. That's the one you paid. If you paid 35%, you divide by 35. Then times what you want, the outstanding. You divide by the percentage that you paid. Then you multiply by the outstanding percentage. I will repeat. You divide by the percentage that you paid. And then you multiply by the percentage that is outstanding. Always audit fees. I'm begging you, that's always the case with audit fees. It's a free mark, and that free mark will help you. Don't take it for granted. Let me make one example, because this is a final exam. I want to make as many examples as possible. 40% of audit fees is outstanding. If it comes like this, 40% of audit fees is outstanding. It's very simple. Take the audit fees in your trial balance. Let's say maybe it's 50,000. 50,000. You multiply by the outstanding. You understand me? How much is the outstanding? They are saying 40% of the audit fees is outstanding. So you multiply by the outstanding, which is 40. Then you divide by the one that you've paid. If outstanding is 40, how much is paid? 60. So you divide by 60. That's how you get audit fees. This is just an example of how they usually set it. But in this case, how did they set it? How did they set it? So they said 40% of the audit fees for the year were paid. But see, Fain PPE Limited paid 40%, which means we paid 40%. What we want is the outstanding. So if we paid 40%, how much is the outstanding? It's 60. You multiply by the outstanding. I don't know if you get me. Here, what did they say? What did I make an example of here? I said 40% of the audit fees is outstanding. We multiply by what? Outstanding. Do you get me? We multiply by outstanding. We divide by the one that we paid. Here. They are saying what? 40% of the audit fees was paid. They are saying Faint Limited Faint Limited paid 40% deposit of the audit fees, which means they paid 40%. The one that they paid, we divide with. Then how much is outstanding? 60%. The one that is outstanding, we multiply with. I've repeated enough now. That's it. That's just a free mark. That's why I'm repeating it as much as possible. So let's see what we're supposed to do here with the audit fees. Okay. So you take the audit fees from your trial balance. How much is it? Audit fees. How much is 25,000 on your trial balance? So you take the audit fees from your trial balance is 25,000. That's your audit fees from your trial balance. That's what you have. Audit fees. That's what you have. Divide by its percentage. That's our favorite formula. I'm using it everywhere. Divide by its percentage. How many percent is it? They're saying we paid only 40%. So which means we divide by its percentage. The one that we paid, 40%. We divide by what we paid. Multiply by the outstanding. If we paid 40%, how much is the outstanding? 40 minus 100 is 60. So which means 60 is the outstanding. We multiply by the outstanding. Don't know how much I can repeat this. We multiply by the outstanding and then we divide by the paid. Free mark. So let's punch our calculator. 25,000 is audit fees that we paid for the year. Its percentage, they said we paid 40%. So divide by 40 times the percentage that you want the outstanding. So you multiply by 60%, which is the outstanding. So the outstanding is 37,500. How did I get the 60%? They said 40% is paid. So if 40 is paid, which means 60 is outstanding. 40 minus 100 gives us 60, right? Yeah, I've said enough. So the answer for audit fees is 37,500. 37,500. That's it. That's audit fees. 37,500. So let's put it there on our answer book. Audit fees. Audit fees. We take the one from trial balance. I will repeat again because I don't want anyone to get audit fees wrong. The one from trial balance is how much? 25,000. So we take that one. Going to say 25,000 divide by its percentage or divide by the paid. So they said how many percent did we pay? 40%. We paid a 40%. So you divide by the paid, which is 40. This is a divide, guys, not a plus. Don't get it confused. So we're going to divide by 40 times the outstanding. If we paid 40, the outstanding is what? 60. They will not give you two outstanding and paid. If they give you outstanding, if it's 60, which means paid is 40. If they give you paid 40, which means outstanding is 60, and you multiply by outstanding. So you punch your calculator. 25,000 divide by 40 times 60. Then we got an amount of 37,500. 37,500. That's your audit fees. So, okay, we are done with audit fees. Let's get into the next thing here. The next thing, insurance. They usually say insurance includes an annual premium of 50,000 that was paid on August 2020. On that case, you take the insurance, you divide by the number of months from August. If they say it's an annual, it's 12 months. So you divide by 12, multiply by the number of months that you will not use for the current year. I think I did this that type of insurance in the previous income statement. So please go to the previous income statement and check that adjustment. If you practice this income statement that we are doing today and the income statement that we will do or that we did back then, the first income statement on this channel, you will pass income statement with flying colors. Just repeat those adjustments, repeat how we do them, repeat, you will pass. So let's check this insurance. They're saying an insurance policy was taken out on 1 August 2021 at 11,500 per month. So which means we took insurance on 1 August 2021. So you can draw your financial year. Draw your financial year. This is March 2021. This is February 2022. March, April, May, June, July, August. So we took this insurance here in August. We had it from August, September, October, November, December, January, February. So we had it for how many months? We had it from August up until February. It's how many months? 1, 2, 3, 4, 5, 6, 7. We had it for 7 months. And they are saying it's how many rents per month? They are saying we are paying 11,500 rands per month. So we're going to say we're paying 11,500 rand per month times how many months? 1, 2, 3, 4, 5, 6, 7. It's 7 months times 7. So that will be the insurance for this year. This is a bit different way of setting insurance. It's not like the usual way that they usually set with. But get used to both ways. So the usual way, go to the previous income statement, you will see it. This one is not the usual one, but know it. So they said insurance was taken out on 1 August. We drew our timeline, then we found August is here. So it was paid from August, September, October, November, December, January, February, which is the end of the year. And we're paying how much per month? They are saying was paying 11,500 per month. So from August, 11.5 times 7, which means the insurance for this year is only 11,500 times 7 months only, which means it's how much? 80,500. So the insurance for the year is 80,500. That's it. 11,500 times 7 insurance. It's 11,500 times 7 months, which gives us an amount of 8,500. Okay. In case you don't know which answer to write, just take the insurance from your trial balance and put it here. In case you are confused, don't leave a space. Just take the amounts from your trial balance and write them here. In case you are really confused, it's bad. Just take the amounts from trial balance and write here. Don't leave space. You might get part marks. Just for that, follow the procedure. The most important thing in accounting is following the rules, being ethical. Follow the rules. You will see. So I think we are done with all our expenses. We have covered all our expenses, so we're almost done with this paper. Such an easy paper. Go and practice it. Remember, this is the trial exam from Gauteng. So go and download it on SA Exams. That's the website, SA Exams. Or if you want it, you can WhatsApp me or email. I can send it to you. Use this paper to practice. And also use the DBE 2021 paper. Use the... I'm not sure. I will remind you. I will make a post on the community, under community on the YouTube channel. I will make a post on the chapters or the papers that you must dwell on. Okay, so let's go to operating profit. How do we get operating profit? Operating profit. How do we get operating profit? To get operating profit, we are going to say operating income, which is this one. operating income plus or minus operating expenses. So we don't have the operating expenses. Why? Because there is a balancing figure for sundry expenses. There is a balancing figure for sundry expenses. So we don't have the total for operating expenses. So if we don't have the total for operating expenses, how can we get this so that we can be able to get the operating profit? Remember, you say gross operating income minus operating expenses is equals to operating profit. But we don't have the expenses to minus here. What do we do? It's very simple. Operating profit and operating expenses, you are most often given. I'm repeating again. On income statement, it's either they will give you an answer for operating expenses or they will give you an answer for operating profit. It's either they give you answer for operating profit or answer for operating expenses. But they will not give you that answer like spoon feeding. They will not do that. They will hide the answer, but it's easy to get it. You go to your ratios. They will give you and say, maybe if they give you an answer for operating profit, they will say operating profit on sales is 30%. If they give you an answer for operating expenses, they will say operating expenses on sales is 30%. Then you just take the sales multiplied by the 30%. Then you get your operating expenses. If they said operating profit on sales, you are going to say the operating profit 30% multiplied by the sales. Did you get that? Go and repeat it. I've given you the gem here. What they usually do on operating expenses and operating profit. They will do it even in your final exam. It's either they do it in operating expenses or they do it in operating profit. You are always given an answer, but they are hiding it. Let me show you where the answer is right here. The answer is right here. I said on your ratios. They are saying the following financial indicators. That's where you get operating profit and operating expenses. This is the following financial indicators for the year. So which answer did they give us this time? They've given us operating profit. If you're given a balance sheet as well, here is an answer for net asset value. Net asset value, it stands for ordinary shareholders equity. That's your shareholders equity answer. You take 720 cents multiply by number of shares issued. 720 times number of shares issued. It's 7.2, right? So 7.2 times maybe 1 million shares issued. If you are doing a balance sheet, that's your answer for ordinary shareholders equity, which is retained income plus ordinary share capital. We will do a video for balance sheet. Oh, but I will have to do it maybe on Monday because I made one copy of this and I've already written a lot of stuff. So we'll do a video for balance sheet on Monday to show you how to turn this net asset value. This net asset value is answer for ordinary shareholders equity on balance sheet. Then this operating profit, it's always like this, guys. Listen careful. This operating profit is your answer for what? Is your answer for your operating profit here on your income statement. Sometimes they give you operating expenses, which is an answer for your operating expenses right here. Now we are given operating profit. So let's turn this 15%. They are saying on sales, the operating profit is 15%. Operating profit on sales is 15%. So which means on this sales amount, there is an operating profit of 15%. Here is how we get it. We take the sales amount, which is how much? 7,800,000, which is the sales amount, times, they are saying it's how many percent? Is 15%. Operating profit on sales is 15%. So you take your sales times 15 over 800, which is 15%. You take your sales times 15%. So your sales is 7,800,000 times 15/100. There, voila, you got your operating profit of 1,170,000. 1,170,000. Done. Nothing hard, nothing difficult. So back to this. Now we are left with Nlenkunzi. This one is left now, the operating expenses. Remember I said when we take our operating profit, when we take our gross operating income minus our operating expenses, it will give us what? Our operating profit. Do you remember that? Our gross income minus what? Our operating expenses, it will give us an answer for operating profit. I hope you get it. These, they go together. I will just tick them so that you can see. Your gross income minus your operating expenses is equals to operating profit. So now we do have the gross income here. We do have the gross income, but we don't have the operating expenses. But we do have the answer, which is the operating profit. So you go up, you say your operating profit minus your gross operating income. You will get this gap here. It's not complicated. It may sound complicated, but it's easy as ABC. So once you got your operating profit, you take your operating profit and minus your gross operating income, you'll get your operating expenses. So let's get them. So our operating profit, we got 1,170,000 minus our gross operating income, which is 306,650. So which means our operating expenses will be 189,650. 1,896,530. 1,896,530. That's it. That's your operating expenses. Now, if you can say your operating expenses minus your operating, if you can say your gross operating income minus your operating expenses, you will get the operating profit of 1,170,000. I just worked upwards. So now let's go. Operating profit, what do we add under operating profit is interest income. Interest income. Interest income. So what are we going to say here? We don't have interest income in this activity. I'm sure of it. We don't have interest income here. Do we have it? There's no interest income. Even if you can check here, there is no. So to save time, interest income is also another kind of a balancing figure. It's like the sundry expenses. Oh, we did not get the answer for sundry expenses here. There is a gap. Let me show you how you get sundry expenses. For sundry expenses, you take your total for your operating expenses, which is 189,650. It's always the case with sundry expenses. You get your total for operating expenses minus all the expenses. Do you get me? So we're going to minus salaries, director's fees, depreciation, trading stock, audit fees, insurance. Then we will get our sundry expenses right here. So let's do it. So our operating expenses total is 189,650. 30. 1,896,530. That's our total. Then we minus the first expense, which is salaries. Minus salaries of 601,450. 601,450. Then the next expense minus director's fees of 470,850. Minus director's fees of 470,850. Then the next expense, depreciation of 281,000. Minus depreciation 281,000. Then minus the next expense. This one is Yona. The next expense, trading stock deficit of 12,630. Minus 12,630. Minus audit fees, the next expense, which is 37,500. Then minus audit fees, 37,500. Then the next expense minus insurance of 80,500. We minus insurance of 80,500. So when we do that, we automatically get the answer for sundry expenses, which is the remaining expense. And it's how much? It's 412,600. So let's write it down. 412,600. That's always the case with sundry expenses. So if they did not give you operating expenses, you use your ratio to get it. Then you minus all the other expenses. Even if they are wrong or right, then you will get your total for sundry expense. You will get your total for sundry expense. Whether they are wrong or right, just do the right thing. If you do the right thing, you can even get 20 marks here. Who knows? So interest income, we said it's going to, after operating profit, the next thing is interest income. And I said it's going to be another balancing figure because they did not talk about interest income. So we move and go to net profit before interest expense. We are going to move. We cannot get that one because in order to get net profit before interest expense, we have to take operating profit plus interest income. Then we get net profit before interest expense. So if we don't have interest income, we cannot get this one as well. Then net profit before interest expense, the next thing that gets in here is interest expense. After net profit before interest expense, the next thing that follows is interest expense. Here you have to be familiar with T account, but more often they give us the interest expense. So where is it? We go to number H. Number H, they are saying bank what statement. We want the interest. So interest expense they are saying is how much? 220,500. That's interest expense. So if in any case you don't understand how we got this interest expense, or maybe sometimes they will put a question mark here in a paper that you are practicing, go to the previous video of income statement and check out how to get interest expense. The previous video I did on income statement. You have to use a T account. If there was no T account there, feel free to, I'm trying to save time now, feel free to WhatsApp me or email me any question that has to do with interest expense on income statement. I will assist you. Because now we are given, it's very simple. We take it and put it there on our answer book. But sometimes they will put a question mark. So if you have that question, you don't know how to get interest expense when there is a question mark, it's very easy. So make sure you check me out so that I can assist you, or you go to the previous video. So interest expense they are saying is 220,500. So interest expense, it's always in brackets, don't forget that. So it's 220,500, always in brackets. 220,500. So these ones are the easiest. Net profit before tax is always 100%. Income tax, it depends on your activity. On this activity, they are saying number J, the income tax is how many percent? The rate is 28%. So income tax, you're going to say is 28%. So net profit after tax is going to be how much? 100 minus 28 is going to be 70. minus 28 is going to be 72. So now you use your favorite formula. What you have, divide by its percentage times what you want. In this case, they given us income tax, which is what we have. So what we have is an income tax of 340,088. Divide by its percentage. How many percent is the income tax? We divide by 28 times what you want. If you want before, net profit before tax, you are going to multiply by 100, then you get answer for before. If you want after tax, you are going to multiply by 72, then you get your answer for after tax. So let's do it so that you can see. So we are given income tax here of 340,088. That's what you have. What you have, divide by its percentage. How many percent is this income tax? Is 28%. So the percent for income tax is 28. That's what our formula says. We divide with, multiply by what we want. If we want before, we multiply by 100. If we want after, we multiply by 72. So let's get both answers. If we want before, we multiply by 100. If we want after, we multiply by 72. Check our previous video. You can see this is one and the same thing. I did it on the previous video, so I cannot explain further here. On the previous video on income statement, I went broad and explained deeply. So let's calculate. What we have is the income tax of 340 and 88. This punch, income tax of 340 and 80. Divide by its percentage, 28. Times what we want. Let's want before. Before is how many percent? Is 100. So we multiply by 100 times 100. No, did I do well here? I multiply by 10. Let's punch again. 340, 88 divide by 28 times 100. So we get 1,214,600. So that's our before. 1,214,600. How did we get it? Open brackets. You said what you have, which is the income tax of 340,088, divide by its percent, which is 28, multiply by the percent of before, which is 100. That's how we got it. Then let's go to after. After, what we have is the income tax of 340,088, divide by its percentage, which is 28%, multiply by what you want. What you want is profit after, which is 72. So we multiply by 72. So if we want after, we're going to say our income tax 340,088 divide by 28 times 72. So we get an amount of 874,512. So it's 874,512. So we're almost done. We're almost done. The only thing we're left with now is what? Is interest income and net profit before interest expense. We have to go up. Remember, when we say operating profit plus interest income, we get profit before interest expense. Now, when we say profit before interest expense minus interest expense, we get this one of net profit before tax. So now we have to go up. We say net profit before tax minus what is this? The interest expense. We add it. When we go up, we add. Sorry, when we go up, we add. since we went down, we were minusing. We say net profit before interest expense minus interest expense. Then we got which one? The net profit before tax. Now when we go up, we're going to say the net profit before tax plus the interest expense which we minused before. So we're going to say 1,214,600 plus the interest expense, which is 220,500. So we will get our net profit before interest expense of 1,435,100. 1,435,100. And then now what we are left with is the interest income. We still go up. When we say operating profit, which is this one, operating profit plus interest income, we are supposed to get profit before interest expense. Operating profit plus interest income, we are supposed to get profit before interest expense. So now we don't have this interest income, so we're going to take our profit before interest expense, then we minus what? Our 1,170,000, because it's positive. So when we go up, it's going to change and be negative, our operating profit. So it's going to be profit before interest expense of 1,435,100 minus operating profit of 1,170,000. When we go up, it changes signs. So our profit before interest expense of 1,435,100 minus what? Our operating profit, which is 1,170,000. 1,170,000. When we go up, it changes signs. So our interest income is 265,100. 265,100. Then you will get your 32 marks. So that's your income statement, guys. Wow, what a long, how many minutes is this one? Oh, it's the usual 1 hour 40. So which means my pace to actually finish income statement is 1 hour 40 minutes. So we're done, guys. Wow, what a journey. I hope you understood, and all the best, guys. I know it's hard. You are writing a lot of subjects, but do your best, try your best. There is no other way. Practice. Remember, your future is in your hands. No one will do it for you. No one will ever do it for you. Not your parents, not your brother, not your sister. It's your own struggle. It's your own life. Take control. Don't get tired this time. You will rest well next year, but now it's time to work hard. So go and practice all this adjustment. Remember, you do not leave gaps, guys. Don't leave gaps. Right? If you don't know the answer, write the one from trial balance here. I don't want to see gaps. Then we will make another video where we will be doing a balance sheet. Yeah, just that this answer sheet is wasted now. Since we are going to do balance sheet on Monday here on this Gauteng paper. So this is the paper, one of the papers we are supposed to practice. Also the paper on DBE 2021, you go and practice it. The cash flow that we did, as well as the income statement that we did, go and practice them, guys. Make sure you understand each and everything there before you sit for your exams. All the best. Don't forget to subscribe. I forgot to say that. Ooh, you guys are watching but not subscribing. Why are you doing that? Stop doing that. Just click there now. As I'm saying, it does not even take a second. Just click there, that subscribe button, so that you get a lot of subscribers and I get the oomph to make more videos. Do not watch if you do not subscribe. Bye, guys. All the best.